gold is incredibly resilient at this price. So we might be sort of, I don't mean complaining, we might be a little upset it hasn't broken out more, and it's down from the all-time high, whenever that was, middle of July. But I mean, it hasn't broken on the downside. Now, I'm not sure. I mean, so it's still flat, and I think the issue right now is that a rate cut in September is already in the market, right? So what's going to push gold significantly higher? What's going to make it break out? I mean, clearly, if the Fed is dovish in his commentary, and Jay Powell in his press conference is dovish, I don't think we're going to see that. On the contrary, I think we're going to see a cut, but Powell is going to be very adamant about inflation and so on, which could be disappointing to the market. We've certainly seen, central bank buying continues. It's down from the record levels of 2023 and early 2024, but it is still a very high level relative to any period before those record years. China is back in the market, as you know. I think it took a pause last fall, early winter. It's now been back in the market for the People's Bank of China is buying gold again for 7 months in a row. So, I mean, I think we're seeing continued steady buying from the most important buyers at the moment. What we're not seeing much of course, is what are called ordinary North American investors. Anyway, and that's reflected most in the gold stocks. So the gold stocks are up massively this year. Nobody could complain, although gold bugs always complain, right? We got that Mac. It's never doing quite what it should. But, when you look at the GDX is up over 60% this year, whatever, 65%, and the 67% as we talk. And a GDXJ, which is not really juniors, but the GDXJ is up 74%. It is staggering to me, but we're seeing that performance even when there are outflows from the GDX and GDXJ. Those outflows are continuing. In early August, we did see some inflows, particularly into the GDX, the larger one. We did see some inflows. But for the month, we've still got 123 million of outflows for the month. And for the year to date, we've got $3.5 billion of outflows, net outflows from the GDX. Now, when you think that's a $17 billion ETF, that has gone up over 60% this year, right? Meaning it started the year at whatever that is. My math's not too good, going backwards. 7 billion. That's an astonishing amount of outflows. GDXJ, same sort of thing. It's a much smaller fund, $6 billion fund, but it's lost $1.3 billion this year. And the fund's up 74% this year. So in January, it was only a you do the math, $2.5 billion fund, and we've lost $1.3 billion this year. So to me, that's very, very significant. And I'll close on this, sorry. But to me, as a contrarian, that is incredibly bullish, because what it tells us is that the ordinary investor, not the gold specialist, not the hedge fund, not the family offices that follow it, not Bill Druckenmiller or other smart, large smart investors, but the ordinary everyday investor, the dentist in Oklahoma or the RIA that is on the Schwab platform. They're not in the market yet. They're not in the market.
Yeah. Why? That's my question. And it is astonishing. But why is that happening?
I think that to me is a little more logical. I mean, to me, the big question is, why is the gold stocks going up so much?
Right.
And you still have the outflows. Who's buying? I've mentioned some of the people who are buying. Anyway, but Why, I think there's a logical explanation for that. I mean, I think individual investors are missing the boat here because the time to buy is when things are cheap, of course, undervalued. But typically, North Americans buy gold and gold assets. They buy gold assets when the economic environment favors gold. That is a weak economy, low interest rates going lower, high inflation going higher, on a weak dollar. Now, until recently, the only ones of those we had was a weak dollar, and even that's only relative. Yes, the dollar was down 11% in the first half, which is its largest first half decline since 1974. 74, 73, 74. So, I mean, a really massive drop for the dollar, but look at it on a 5-year chart. It's still high. And on a purchasing power parity, it's still relatively expensive. Not as much as the Swiss franc, of course, but still relatively expensive. But the environment we saw for the last 2 years, let's say, was the opposite of that. It was just not conducive to gold investing. And the people who were buying gold were buying for reasons that didn't have much to do with the economy. You know, central banks buying to diversify assets and so on. Clearly, I think it's got to be clear to people now that the economy is slowing. You know, the bulls can look at bright spots, but to me, it's very, very clear, especially when you look at the labor market. We can talk about that if you want, but the labor market is clearly deteriorating rapidly. And I would say that the bottom half of the US in terms of income are already in a recession and have been all year.